स्टार्ट होने दबाया नहीं था क्या उस टाइम?
Good evening, friends. GI Digest has come with a new motor insurance quiz for you people. So, Shri Pawan Madan sir is with me. We are going to conduct this motor insurance quiz, which is based on recent development in motor TP, and it is having many new and exciting provisions and points of motor OD also. The quiz has been prepared with exam point of view only. Still, we will be covering all the concepts of motor insurance, not only OD but TP also. So without wasting any more time, we will start. But before that, I would like to introduce Shri Pawan sir, and I will request him to say few words to you. Pawan sir.
Good evening, friends. On the behalf of GI Digest, me and Pranav welcome you all to the motor quiz. This time, actually, due to our some professional commitments and personal commitments, we could not get the time and could not come up with the more videos on the various LOBs and various subjects. But whatever time we got, we uploaded one good video on fire insurance, and courtesy Mr. VN Sandeep sir, and we thank you all for the appreciation we have got for that video, and we have got more than 3.5k views on that video, and that video was a very 3.5 hours video. So most of you have taken that valuable time out of your busy schedule, and they have seen that video. So we are thankful to you, and most probably in next 2-3 days we are going to bring one elaborate and very comprehensive video on HR. That will be the most extensive material you would have ever seen on HR. So do tune in, and do subscribe so that you can get a notification whenever that video is uploaded. And last time we did a fire quiz, so due to some network issues there were some problems in the streaming, so we apologize for that, and today we will try to make this is a grand success. And after that video was uploaded, we have got more than 2k views on that quiz also. So people, even though they could not join online or there were some issues, but after once it was uploaded again, people have seen, and we have received very overwhelming response to that also. So today quiz, so what we will do, that we will run the quiz, and after every question a time will be given to you, and you can type in your answers in the chat box. And I will request all of you to participate more and more and write the answers. See, there is no quiz as such to evaluate. We are not here to evaluate anyone. So if some people does not get the answers also, please don't get demotivated. It's just a learning exercise. We all have to learn. That's the main motto behind GI Digest. That's the main motto behind the live quiz. Paper will come and go. So only thing is that we have to become more competent, more skilled than yesterday. So we have to improve ourselves. That is the main motto. And so if you are not able to answer it also, still 5-6 days are there, you can again go and revisit. So we are not assuring you that these questions will come or not, nothing of that sort. We are just here so that you can review your preparedness, whether some things are left, then you can pay some attention to it. And every questions we will try wherever possible. We will try to revise certain concepts also. It won't be like you will be simply putting A, B, C, D and that quiz will be over in half an hour. So it won't be like that. We will, every question, every answer, we will try to explain why this answer is there, and from where this concept has been taken, from which GR, from which section. So it will be like a revision exercise also for you. So without wasting any time, I will request Pranav to proceed with the quiz. So we'll meet you in the end. In the end we will, and just stay tuned also. In the end, there is something new for you also. Okay.
Come on friends, we are moving to the first question. So first question is on screen. As per GR 8, when a loss will be considered as constructive total loss? Option A, when aggregate cost of retrieval and or repair exceeds 80% of IDV. Option B, when aggregate cost of retrieval and or repair exceeds 75% of IDV. C, when aggregate cost of retrieval and or repair exceeds 90% of IDV. Or option D, when aggregate cost of retrieval and or repair exceeds 85% of IDV. So 5 seconds are starting now. The correct answer is when aggregate cost of retrieval and or repair exceeds 75% of IDV. Pawan sir will explain.
So see, in each and every line of business, there is a concept called CTL. So if you see marine insurance also, there is a concept called CTL. So as far as motor insurance is concerned, the TL and CTL, the GR8 deals with it. So it is written in GR8 that when a loss will be considered as a CTL. So GR8, it deals with the IDV and what will be the liability of the company, and that is limited to the IDV, and that only governs the TL and CTL, not the partial loss. So it is 75% of the IDV. So when the aggregate cost of retrieval and / or repair, it exceeds 75% of the IDV, it will be treated as a CTL. So numericals may be asked where the total liability exceeds 75%. So That's why this concept is very, very important. We'll move to the next one.
I have seen that everybody has answered B option only. Not even a single answer is wrong. So we are moving to the question number 2. In which of these countries the geographical extension is not allowed? Option A, Nepal. Option B, Bhutan. Option C, Afghanistan. Option D, Maldives. Here are your 5 seconds. The correct answer is Afghanistan.
So if you see that the jurisdiction of tariff is throughout the territory of India, but since we share the land borders with so many countries, and there are various vehicles of other countries which are plying on the routes common to both India and that neighboring country, so a need was felt that the liability or the loss or damage during that when the vehicle applies to that countries, that should also be covered. So that is dealt in GR4. So the answer is Afghanistan. And the 6 countries, the how you can learn it is that PNB SBM, Punjab National Bank Senior Branch Manager. So P for Pakistan, Nepal, Bhutan, Sri Lanka, and Bangladesh and Maldives. So PNB SBM. So since Afghanistan is not there, so answer is Afghanistan.
Very good response, friends. Many answers we are receiving just within 3 or 4 seconds. Thank you. Now we are moving to question number 3. In case where owner is having automobile association membership, what will be the maximum amount of available discount for motor OD premium of a private car? Option A, rupees 100. Option B, rupees 2000. Option C, rupees 200. And option D, rupees 500. The clock started. The correct answer is rupees 200.
So this is the discount which is envisaged in GR 28 of the Indian motor tariff. So for both two-wheelers and the private car, and the discount structure is like that: 5% of the OD claim subject to a maximum of 200 in case of private car, and for two-wheelers it is 5% of the OD premium subject to the maximum of rupees 50. So if any vehicle and that owner has a automobile association membership, so he can always avail this discount, and the maximum discount in this case is rupees 200. So the answer is C.
Here is the question number 4. What is the amount of additional premium charged for goods carrying vehicles for each 100 kilograms in excess of 12,000 kilograms? First option is rupees 27. Second option, rupees 37. Option C, rupees 35. Or D, rupees 25. The time starts now. The correct answer is rupees 27.
See, if you see the tariff, the section 4, which deals with the all the commercial vehicles. So section 4, if you see the A section, the goods carrying vehicle, you will get the there is a the tariff OD structure is there. How much the premium will be paid on the IDV. But for the vehicles exceeding 12,000 kg, along with that rate, for every 100 kgs a premium has been stipulated, and that is rupees 27. So the persons who are dealing with the motor underwriting on day-to-day basis, they might be aware of this fact. For the persons who are not dealing with this motor LOB, because GI, general insurance, is a very vast industry, so for them this is a fact. So you remember it, rupees 27.
So friends, we are coming to the question number 5. The question number 5 is, For which of these the knock for knock agreement is applicable? Option A, indemnity. Option B, subrogation. Option C, contribution. Or option D, proximate cause. The time starts now. The correct answer is subrogation.
See, you all would have learnt about the principles of insurance in your licensate classes and even in your induction classes also. So that concept has been little bit waived off in the case of motor OD claims. So what happens that if there is an accident between the two vehicles, the vehicle there is always a chance that a subrogation can be exercised by one of the party against by the insurer of the one of the party against the other party. So that will be a very tedious exercise because Motor Vehicle Act, even though it provides for a TPPD claim, but it will be if every case goes to the court, it will be a very tedious exercise for each and every claim. The court will be overburdened and it will be very difficult because in that case there are so many things. Negligence has to be established, everything has to be established. So in order to make the things easier, all the general insurance company under the banner of GI Council have come up with this concept knock for knock agreement, where this subrogation has been waived off and each insured vehicle owner will pursue the OD claim against their own insurer rather than the TPV insurer. So the knock for knock agreement is applicable to the principle of subrogation. We'll move to the next one.
Question number 6. For A1 type of vehicles under commercial vehicle tariff, Ahmedabad city has been kept in which zone? So we have to tell the name of zone. Option A, zone A. Option B, zone B. Option C, zone C. And option D, zone D. So your time starts now. The correct answer is option C, zone C.
See, if you see, the zones are dealt in GR10 and it has various zones for two-wheelers and private cars and commercial vehicles. So if you see for the A1 category, first of all you should remember what does this A1, A2, A3, A4, C1, C2, C3, C4 are meant for. So that you have to remember. So A1 deals with the goods carrying vehicle other than three-wheelers. So for that the zones are divided into three categories, A, B and C. The zone A deals with the metro cities, zone B deals with the state capitals and zone C deals with the rest of the cities. And that cities means the where the vehicle is registered. So the parameter is the where that vehicle has been registered. So if you see, Ahmedabad is not a state capital. So many people have this impression that Ahmedabad is a capital of Gujarat. Actually it is Gandhinagar. So Ahmedabad is not a metro city, means a metro in the sense that Chennai, Mumbai, Delhi and Kolkata. So it will come under zone C, not zone B or A. So answer is zone C.
Now we are moving to the question number 7. How many perils are covered in a motor private car package policy? Option A, 7 perils. Option B, 10 perils. Option C, 12 perils. Or option D, 15 perils. So we are starting the time. The correct answer is option B, 10 perils.
See, the motor package policy, if you see, it's a named perils policy. It's not a all risk policy. It's a named perils policy. The perils which the insurance company undertake to cover is already defined. And if you see the section 6 of the Indian Motor Tariff, which deals with the standard wordings of the various policies. So the private car package policy, there are 10 perils. So some of you might be confined to GRs and IMTs. So please go through the section 5, 6 of the Motor Vehicle Act, because the questions may be asked within the conditions, exclusions. So these are very important. You can't miss those. So we have tried to cover some of them in our questions, but since it is a very elaborate subject, So I would request you to kindly devote some time to these sections also. So the answer for this question is B, 10.
Thankful to Pawan sir. He is not only explaining the answer but also suggesting what are the materials we have to go through to succeed in the exams. I'm sure this will be very helpful for our audience to crack this exam. With all our best wishes, we are moving to question number 8. Regarding the vehicles subject to lease agreement, which one of the following is not incorrect? Please pay your attention. Which one of the following is not incorrect? A. Policy to be issued in the name of lessor only. Option B. Lesser interest can be protected by way of endorsement IMT 7. Option C. Both A and B. Option D. Neither A nor B. The clock has started running. The correct answer is neither A nor B.
See, this question we have deliberately given because examiners like it very much to confuse the aspirants. So in the question itself they will put two negative statement and negative becomes positive. So in this case it is not incorrect, that means is correct. So which of the following statement is correct? So if you see the lease agreements where the vehicle has been subjected to lease agreement, that issue has been dealt in GR 20 of the Motor Vehicle Act of the Indian Motor Tariff. So it specifically says that policy has to be issued in the name of lessee, not the lessor. So the A statement is completely wrong. The B, lesser interest can be protected by the way of endorsement IMT 7. So it is not IMT 7, it is IMT 6. So both A and B are wrong. So the answer is option number D. So when you read any question, first of all, at least read 2 or 3 times, because in hurry, in order to be little bit fast or maybe in anxiety or whatsoever, so we don't read the question itself. So we should read it, because these days these conceptual questions are coming, and these not incorrect, not correct, not relevant, not irrelevant, all such types of questions are asked. So please pay attention to the questions, what is the intention, and don't get confused, don't fall into the trap of the examiner. So you see the question twice and then only answer it. Thank you. Next question.
Which of these is correct regarding cancellation of motor insurance? If cancellation is done by insured. Option A, 7 days registered AD notice, retention of premium by insurer on pro rata basis. Option B, 15 days registered AD notice and retention of premium by insurer on short scale basis.
Short period basis.
Option C, 7 days registered AD notice, retention of premium by insurer on short period basis. And option D, 15 days registered AD notice, retention of premium by insurer on pro rata basis. So 5 seconds started now. The correct answer is 7 days registered AD notice and retention of premium by insurer on short period basis.
So if you see, this cancellation of insurance has been dealt in GR 24A. So it gives 2 ways. It gives the flexibility both to the owner as well as the insurance company. For both of them, the period, the registered AD notice time period is 7 days, and like in any LOB, when the policy is cancelled on the behest of the insured, it will the premium will be always retained by the insurer on the short period basis. So having said that, but these policies can be cancelled only when that insurer has to make sure that at least that vehicle is insured minimum for that liability only cover, otherwise the insurer cannot cancel it. First point, and moreover there should be no claim and it is subjected to the retention of the minimum premium. So these are various things which comes into play when a motor policy has been cancelled. All these facts have to be taken into consideration. So the answer for this is 7-day registered AD notice and the retention of the premium by the insurer on the short period basis.
Pawan sir, I have seen the people are coming with correct answers for many questions. I feel they are already ready for the upcoming exam. So, my dear friends, this is for your revision only, that we are coming to these questions and we are explaining the concepts also. Now question number 10 for you. A vehicle was hypothecated with financier ABC Bank. The vehicle was insured by owner for the period starting from 1st of January 2022 to 31st of December 2022 from insurer X. Inadvertently, bank also insured the said vehicle from 15th of January 2022 to 14th of January 2023 from insurer Y. Now two insurers have insured the same vehicle. So that due to insistence of bank, policy issued by insurer X was cancelled. In this case, how the premium will be retained by insurer X? A. No retention will be there and entire premium will be refunded. Option B. Retention of premium on short period basis will be done. C. Retention of premium will be done on pro rata basis. Option D. None of the above. So your time starts now. The correct answer is retention of premium will be done on short period basis.
So in earlier question we dealt with cancellation of insurance GR24A. This question is pertaining to GR24B, double insurance. So there is one error in this question, that the vehicle was insured by owner for the period 22 to 20. It is 31st December 22. My apologies, we missed it out. So the GR24B is clear that the later policy has to be cancelled, but it also says that because most of the vehicles are hypothecated and if due to involvement of the bank or any financial institution the earlier policy has to be cancelled, then the premium will be returned on the short period basis. So these are some hypothetical questions we have deliberately put. We could have simply asked you without giving you any hypothetical situation also, but even for the persons like scale 3 to 4 or 4 to 5 who are going to appear, the questions will not be direct, it will be application based questions. The situations will be given, situational questions will be there, and you have to apply various GRs. There will be interplay of GRs, and we have various numericals also in the later part of this quiz. So we will see how the various quizzes are, how the various GRs are, interplay of GRs is being asked by the examiner in the questions. So we'll move to the next question.
Question number 11. A motor trade policy has to be renewed for first time. No claim has been reported for the first year. How much NCB can be offered by insurer as per tariff? Option A 20%, option B 25%, option C 15%, or option D none of the above. We will give the correct answer after these 5 seconds. Correct answer is none of the above. Again attempt to trap.
So this is a what to say, I've deliberately written motor trade policy, otherwise the people will simply say 20%. So NCB GR27, you go through it, there are so many sub rules in that GR27. So it gives enough questions to the examiner to set. So 1 or 2 questions may definitely be asked, and they have been asked. So NCB cannot be given on a motor trade policy. So the answer for this is none of the above.
Question number 12 is coming for you. In case of laid up vehicle Which one of these is correct? Option A, NCB has to be calculated before deduction of rebate for vehicle laid up. Option B, if the policy period was extended for laid up, half of the extended period shall be deemed to part of preceding year of insurance. Option C, if the policy period was extended for laid up, entire extended period shall be deemed to be part of preceding year of insurance. Option D, both A and B. The time starts now. The correct answer is, if the policy period was extended for laid up, entire extended period shall be deemed to part of preceding year of insurance.
So it is another interplay of GR27 and GR31. GR27 says that if a vehicle has been laid up, how the NCP has to be calculated. So here the NCP has to be calculated after the deduction of rebate, not before the deduction of rebate. So they first have to, because as you know, GR31 says that if the vehicle has been laid up, the insured has to give a prior intimation to insurer, and the insured has two options: either to get a rebate, or which will be adjusted in the next insurance, or to extend the coverage itself by that particular months for which that vehicle has been laid up. So that rebate has to be deducted first, and then NCP has to be calculated, not the vice versa as suggested in A. So the A answer is incorrect. B, it also says that GR21 also says that if the policy period has been extended for the laid up, then the entire period, means if the vehicle was laid up for the 3 months, so the 12 months plus 3 months, so those 15 months will be considered as the preceding period of insurance. So the correct answer is C. If the policy period was extended for laid up, entire extended period shall be deemed to be the part of the preceding year of insurance. So the answer is C.
Be ready, friends. Question number 13 is coming on the screen. A car motor dealer installs anti-theft device in the vehicle and approaches the insurer for issuance of motor trade policy. What is amount of anti-theft discount that can be given by the insurer? Option A, 2.5% of OD premium, subject to maximum of rupees 500. Option B, 5% of OD premium, subject to maximum of rupees 200. Option C, 2.5% of OD premium, subject to maximum of rupees 200. Option D, none of the above. So the time starts now. The correct answer is none of the above.
See, again same question, again same type of to confuse all of them, these things are asked. So if you see GR30, which deals with the anti-theft discount, the motor trade policy is excluded from its ambit. So if a motor dealer or a showroom owner insures the vehicle for E, F and G under that policy, so there is no anti-theft discount insurer can give on that thing. So answer is D. So it is not applicable at all.
So friends, don't mistake us. We are not trying to confuse you, but we are trying to show how examiner tries to confuse the examinees. Now we are moving to the question number 14. In case of laid up vehicle, which one of these is incorrect? A, the period of layup shall not extend beyond 12 months from expiry of policy period in which layup has been continued. Option B, certificate of insurance has to be returned to insurer. Option C, both A and B. Option D, neither A nor B. You have to reply in these 5 seconds. The correct answer is option D, neither A nor B.
So the question says which of them is incorrect. So if you see GR 31, it says that the period of it is subject to a condition. The whether it is a cash rebate or whether it is extension of the policy period, it is subject to a certain conditions, and one of the condition is that the period of layup shall not extend beyond 12 months from the expiry of the policy period in which the layup has been commenced. So the first option is correct. So A cannot be an answer. Then certificate of insurance has to be returned to the insurer because the vehicle is already laid up. It will not ply on a public road. By that logic, the GR 31 also says that the certificate of insurance has to be returned to the insurer because certificate of insurance is needed when a vehicle has to ply on a public road, and it has to comply with the provisions of the chapter 11 of the Motor Vehicle Act, that a minimum third party liability insurance is there. Since the vehicle will be in garage, it will be not plying on a public road, it is laid up, so there is no need as such. So that certificate of insurance is surrendered by the insured to the insurer when this endorsement is passed. So the B option is also correct. So both are correct. Our question says which one of them is incorrect. So neither A nor B, answer is D. So again I will say that you read the question 2 times, you read the answers also 2 times, because both, neither, all those things, there are various logical combinations might be there. So please don't be in a hurry. The time is sufficient enough, and you have to select only 4 subjects which you have to answer. So enough time is there. Whatever you do it properly, you do it by paying attention to it. Okay.
Sir, one person, Shri Prakhar Kastwar, he is saying, so in case of fire and theft cover, there will be no certificate of insurance. Can you please elaborate, sir?
Yes. See, as I told you, for fire and theft risk, because the vehicle is there in garage, so there will be no certificate of insurance as such. If you see, I will take this concept a little bit more forward. Like now there is a concept of standalone OD policy. So standalone OD policy, what does it cover? It covers only the own damage part. It does not deal at all with the third party. See, the certificate of insurance, if you see the Central Motor Vehicle Rules, if you see the GRs, if you see the Motor Vehicle Act, why is certificate of insurance needed? As per section 146 of the Motor Vehicle Act, no vehicle can ply on the road until and unless there is a minimum third party policy running on that vehicle. There is the third minimum that has to be covered for the third party. So certificate of insurance ensures that if you see why for each and every LOB policy, why there is no certificate generated, only for motor policy it is generated. It is generated so as to make this, because tomorrow if the traffic wala, police wala catches you and say that you give me your policy, he is not interested in your policy schedule, he is only interested in your certificate of insurance, because that will tell that you have complied with the chapter 11, 12 and 10. Now it is deleted chapter 10, but chapter 11 you have complied with it. So certificate of insurance is only needed when you have to ply on a public road.
Now we are coming to question number 15. Only registered owner of vehicle should be insured except A. Motor dealer, B. Lesser in case of lease agreement, C. Both A and B, D. Neither A nor B. 5 seconds started. The correct answer is A. Motor dealer.
So if you see the GR 34, it says that only the registered owner of the vehicle can be insured, and it lists out the various exceptions also, except in which cases this can be violated. The first one is the motor dealer. See, motor dealer has the custody of, he is the one who is selling the vehicle, so the registration thing comes after it. Once you purchase the vehicle, then you only register the vehicle. So if a motor dealer has to insure the motor, then he is not a registered owner, but he can still insure it because he has a pecuniary interest in the subject matter, so he can always have insurance. Then another was the temporary substitution, so it is not there, so we will leave it. The third one is that GR19, GR20, GR21. So in that case, the vehicle which are subject to hire purchase agreement, which are subject to hypothecation agreement, which are subject to lease agreement, in all such cases the exceptions have been given. So, but if you see in B, it is lesser, it is not lessee. So answer is GR20 it says lessee, not lesser. So B is wrong. So the correct answer is motor dealer. So the answer is A.
Question number 16. A private car was requisitioned by government in purpose of monitoring model code of conduct during elections. In order to cover the car during period of requisition, option A, insured needs to pay an additional premium. Option B, car is automatically held covered without any additional premium. Option C, government will pay the premium. Or D, none of the above. So we have to reply in 5 seconds. The correct answer is car is automatically held covered without any additional premium.
So there are various circumstances in which sometimes the vehicles are requested by the private owners. Like one of such cases is the legislative assembly elections or a parliamentary elections, in which usually the election commission will nominate certain officers to visit that constituency and see whether all things are in order or not. So GR38 deals with it. Whenever such vehicle is requisitioned by the government, then that vehicle is automatically held covered without any additional premium. So the answer is B, neither A nor C. So the answer is B.
Question number 17. A private car not exceeding 1500 cc was insured for fire or theft risks only. What is the amount of compulsory deductible that will be applicable in case of any loss? Option A, rupees 1000. Option B, rupees 500. Option C, rupees 1500. Option D, 0, since it is restricted cover. So we will give the correct answer after these 5 seconds. The correct answer is rupees 1000.
See, this question deals with both GR45 and GR40. So GR45 deals with the restricted covers and GR40 deals with the compulsory deductibles. So if you see, even if when the vehicle has been given a restricted cover either under GR45A or 45B, still the compulsory deductible will apply as it is. So there will be no change in the compulsory deductible as stipulated in GR40. So if you see the table, the private car not exceeding 1500 cc, the excess which has to be applied before settling any claim is rupees 1000. So the same will apply irrespective of whether it is a full cover or it is a restricted cover. So the answer is 1000.
We are quickly moving to the question number 18. Question number 18 says, what is the rate of OD premium to be charged for non-electrical accessories? Option A, 4% of non-electrical accessory amount. Option B, 5% of OD premium. Option C, 4% of OD premium. Option D, OD rate applicable for that particular class of vehicle. The time starts now. The correct answer is OD rate applicable for that particular class of vehicle.
See, don't get confused between electrical accessories and non-electrical accessories. The question has been specifically sought regarding the non-electrical accessories. If it would have been electrical accessories, the answer would have been A, the 4% of the value of the electrical accessory. So whenever there is a non-electrical accessory which does not find a place in the manufacturer listed selling price, so the rate the basic OD rate which is given in the tariff, which we apply on that IDV, means on that IDV as per GR rate, the same rate will apply on the non-electrical accessories also. So the answer is D. So the ones who have dealt with the OD claim and the OD underwriting, the motor underwriting, they will know this thing. For the others, it might be a new fact to them. So the answer is, so distinguish between whether it is electrical accessories or a non-electrical accessory. If it is electrical accessories, then the value of that accessories, the 4% on that. If it is a non-electrical accessories, then the OD rate which is applicable as per that class of the vehicle, that same rate will be applicable for the non-electrical accessories also.
Question number 19. In draft notification issued by MORTH, Ministry of Road Transports and Highways, named Motor Third Party Premium and Liability Rules for Financial Year 2022-23. How many discount has been proposed? How much discount has been proposed for electrical and hybrid electric vehicles respectively? Option A, 15% and 7.5%, means 15% for electrical vehicle and 7.5% for hybrid electrical vehicles. Option B, 7.5% and 15%. Option C, 10% and 5%. Option D, 5% and 10%. The time starts now. The correct answer is 15% and 7.5%.
So I will tell you about the answer first. Later on. First of all, there is one thing which has come new in this year. The first thing is that the earlier what used to happen in every month of March, the IRDA used to come up with the motor third party rates. So which will be applicable for the next financial year. Usually the circular would be issued by the IRDA. This time, because of the amendment, because the motor vehicle amendment is now coming into the force, the third party provisions are coming into the force from 1st of April 2022. So if you see the section 147 says that central government in consultation with the IRDA will arrive at the rate and the corresponding liability. So now it is the duty of the central government. So MORTH is the ministry in central government. So MORTH has come up with this notification, and notification was issued on 17th March, and it is still in the stakeholders domain. It is on the public domain, and it is for the inviting the comments of the various stakeholders, the transporter lobby, the various insurers, and various NGOs and all those things. So and they have named this as motor third party premium and liability rules for financial year 22-23. So now each and every year we will get a similar notification whenever they want to change the rate. The MORTH, they will come up with, so next year it will be 23-24. So if you see now, because the electric vehicles are future of in automobile industry, and for the transition from the the conventional sources of power to the non-conventional, there in between there will be hybrid electrical vehicles also, which will run on both electrical as well as the petrol and diesel. So a discount have been proposed on the TP rates by the ministry itself. So that discount, it's a factual thing only. This is for electric vehicle, it is 15%. For the hybrid electric vehicle, the 7.5% of discount has been proposed by the Ministry of Road Transport and Highway in consultation with our regulator IRDAI. So the answer is A, 15 and 7.5%. We'll move to the next question.
Before moving to the next question, I have just observed that around 100 people are joined in this live quiz, but we are receiving answers from only 30 to 35 people. I request others also, you also come with your answers. It may be correct, or in case it is not correct, then also you will learn something, but it will boost your confidence to give your answer, to check your preparation. And with the same motive, we are moving to question number 20. Question number 20 says, what is the amount of premium to be charged for fiberglass fuel tank in class D vehicle? Option A rupees 50, option B rupees 100, option C rupees 150, or option D rupees 200. The 5 seconds starts now. The correct answer is rupees 100.
See, this fiberglass fuel tank is dealt in GR 43 of the Indian Motor Tariff. So, except for Class D vehicle, it is rupees 50, and for Class D vehicle, it is rupees 100. So, the correct answer is option B, rupees 100.
Question number 21. In case of two-wheeler used for driving tuitions, how is the premium loaded? Option A, OD premium plus 60%. Option B, OD premium plus 60% and TP premium plus 60%. Option C, OD premium plus 33.3%, or option D, OD premium plus 33.3% and TP premium plus 33.3%. The time starts now. The correct answer is OD premium plus 60% and TP premium plus 60%.
So the answer for this question is OD premium plus 60% and TP premium for 60%. So the driving tuitions, the vehicles which are used by driving tuitions, how the rating will be, it is dealt in GR 44. So if you see only for the two-wheelers and the three-wheelers, the auto rickshaws, the premium, both OD and TP has to be loaded by 60%. And for other type of vehicle, it is only OD premium plus 60%. So you can remember like this, because if you see a two-wheeler or a three-wheeler, there is no another seat along with the driver where the driver can train the other person. So in that case, both OD and TP premium has to be loaded in like in private car or a goods commercial vehicle. There can always be a facility of double clutch, double gear. So only for that, only OD premium has to be loaded by 60%. But for these three-wheelers as well as the two-wheelers, this OD premium as well as TP premium has to be loaded by 60%. So the answer is B. We'll move to the next one.
Question number 22. A Class D vehicle has to be insured for fire risk only. How much premium has to be charged? Option A, 0.5% of IDV. Option B, 0.75% of IDV. Option C, 0.9% of IDV. Option D, none of the above. The time starts now. The correct answer is none of the above.
See, GR 45A is quite clear that the restricted cover cannot be given to a Class D vehicle. So there is no, when it cannot be given, there is no way we can charge a premium. So the answer is D. For other vehicle, it is if it is for fire, then 0.5% of IDV. If it is for theft, then 0.5% of IDV. If it is for both, then 0.75% on IDV. So in this case, since it is a Class D vehicle, the restricted cover cannot be given. So the answer is D.
We are moving to question number 23. The question number 33 is also coming with a hypothetical situation where Mr. A sold his vehicle to Mr. B. Mr. A was enjoying 50% NCB on that vehicle. NCB means no claim bonus. How much NCB would be allowed by insurer to the new owner, that is Mr. B? Option A, 50% NCB. Option B, 25% NCB. Option C, 15% NCB. Option D, nil, means no NCB. So time starts now. The correct answer is nil.
So they all know that NCB goes with the owner, not with the vehicle. So that's why when we pass a transfer endorsement, there is a concept of NCB recovery also, concept of NCB recovery from the new owner if he does not have any. So In this case, so the 50% which was earned by O, it went with A itself. So the B have to be will not be given any NCB, and any NCB recovery is there, it will be done. So the answer is D.
Question number 24. Which of the following does not have policy access? Option A, two-wheeler. Option B, private car. Option C, commercial vehicle. Or option D, none of the above. So your time starts now. The correct answer is none of the above.
See, GR40 deals with all the excess compulsory deductibles. So for each class of vehicle, there is a stipulated excess which has to be applied before the settlement of any claim. So since every vehicle has a predefined policy excess, and it is mentioned in the terms and conditions of the policy too, answer is D. So all of them have excess. There is no class which does not have any excess.
Question number 25. What is the percentage of loading for the vehicles imported without custom duty? Option A, 30%. Option B, 25%. Option C, 20%. Option D, 15%. The time starts now. The correct answer is 30%.
So GR37 deals with the situation where the vehicle have been imported without the custom duty. So basically these vehicles belong to the embassies and consulates, and where the import duty element has not been included in the invoice in the IDV. So in that case, OD premium has to be loaded by 30%. So the answer is A, 30%.
This seems to be a easy question. This time almost everybody has given the correct answer. Now question number 26. Award of interest on compensation comes under which section of Motor Vehicle Act? Option A, section 171. Option B, section 172. Option C, section 173. Or option D, none of the above. The 5 seconds started. Correct answer is section 171.
So if you see the section 171 mentioned in the chapter 12 of the Motor Vehicle Act, along with the compensation, the tribunal, it empowers the tribunal to grant the interest also. So the answer is section 171, and it says that the interest has to be a simple interest. And usually what the court does, the court sees the prevailing bank rate interest, how much the banks are giving in the various fixed deposit rates and all those things. Based on that, the court will grant an interest, but it cannot be a compounded rate of interest. It has to be a simple rate of interest. So the award of interest is dealt in section 171 of the Motor Vehicle Act. From now on, we will be little bit shifting from the OD to the TP part and the various changes which have come in amendment. You may find some similar questions which we did in the last quiz also, but there are new participants, there are new aspirants which will be appearing newly. So we have deliberately, even though it is we have deliberately included them so that, moreover, now since the amendment has been, the third party provisions of the new amendment has been brought into the force from 1st of April 2022, there is every likelihood that the questions may be asked on the new amendment. So we have tried to cover maximum changes through via questions in the form of questions, which we will see in the which we will see next.
See, our intention is not to provide you maximum number of questions. Our intention is to provide the probable kind of questions which are more likely to come into the exams, or the concepts which are related to those questions. We are going to clear all these concepts with you also, so that at the time of examination you will feel easy, and these questions will not be a problem for you, and you will be coming with the high scores. This is why we have repeated those questions only which are more likely to come in this year's exam also. Don't feel it otherwise. Now we are moving to question number 27. As per latest amended Motor Vehicle Act, hazardous license is valid for what duration? We have to answer the duration. A. 3 years, B. 5 years, C. 7 years, and option D. 1 year. So the time start now. The correct answer is 3 years.
See, prior to this amendment, the hazardous license was valid for 1 year. After this, this amendment actually was given the presidential assent on 9th of August 2019. So, certain provisions came effective from 1st of September itself, 2019. So, DL, all the changes related to DL were one of those which came into effect from 1st of September 19 itself. So, there is confusion among the various, I have seen the confusion among the various officers of the company that when is this amendment have been implemented. So, if you see the Amendment Act wordings, the legislator have specified that for each provisions there can be a different implementation date. So, these DL provisions were made effective from 1st of September. You would have seen the hue and cry when these penal provisions, the fines were increased, and it was in every national daily, every every debate on a national TV that if you don't wear helmet, this your now fine is going to increase multifold. If you don't have the insurance policy, then these all were effective from 1st of September itself, 19. But the third party provisions, the chapter 10, 11 and the amendments in these chapters have been made effective from 1st April 2022 only. So this hazardous license, it is from 1st September 19 and the period has been increased from 1 year to 3 years.
So we are moving to question number 28. As per amended Motor Vehicle Act, what is the amount of compensation given to death victim under hit and run case? This is not a ordinary case of TP. This is hit and run case. Option A, rupees 12,500. Option B, rupees 50,000. Option C, rupees 1 lakh. And option D, rupees 2 lakhs. The 5 seconds starts now. The correct answer is rupees 2 lakhs.
See, section 161, it deals with the hit and run compensation. So, in this new amendment, the amount has been increased. For the death victim, earlier it was 25,000, it has been increased 8 times to 2 lakh. And for grievous hurt, it was rupees 12,500, and which has been now increased to 50,000. So, hit and run are those cases in which, in spite of the best efforts, the identity of the vehicle causing the accident is unknown. So, in order to deal with such cases, because when the vehicle is not traceable, then how the compensation will be paid to the victim? The government has come up with the hit and run scheme earlier in the Motor Vehicle Act 1988. And that time one Solatium Fund scheme was there, 1989, which was framed, in which the entire procedure is there. When there is a hit and run case, whom to approach and what are the prescribed time limits, the claim inquiry officer, the claim settlement commissioners of that SDM of that district and the district commissioner of that district, and in how much time that application will be filed, and so all the time limits are there for hit and run cases. So now that Solatium Fund, now it is no more in existence. It does not talk about any Solatium Fund now, the Motor Vehicle Act. Now if you see under section 164B, a new Motor Vehicle Accident Fund has been constituted, and it has various 3 sub accounts. So that draft notification is also now that has been now gazetted also on 25th of February by MORTH, and it has various 3 sub accounts. The motor vehicle accident fund will have now 3 sub accounts, and the third account it deals with the hit and run compensation. And it also says that the balance which is being left in the Solatium fund, the balance which is already existing, which is now in under the control of New India, so that balance will be transferred to that sub account of the motor vehicle accident fund, which is now newly constituted. So these are the changes which have been brought regarding the hit and run compensation in the new amendment. For this question, the answer is 2 lakhs. The other things you can expect. Yeah, Madhuji, yes, this is implemented. This has been implemented from 1st of April 2022. We will be soon getting such type of cases whenever the accident happen and hit and an accident happens. So if the date of accident is after 1st of April 2022, the revised scales of compensation will be paid by the concerned officials. And all these funds have been made, the General Insurance Councils have been made, they are under the custody of the General Insurance Council. A proper trust has been maintained in which various peoples are there, and even our United India beloved CMD sir is also the part of one of the trust in this hit and run case. We'll move to the next one.
Question number 29. As per Pronoy Sethi judgment, what multiplier is used if the age of deceased was 53 years? Option A, multiplier of 11. Option B, 5. Option C, 7. Option D, 9. The time starts now. The correct answer is 11.
See, for TP, other than the Motor Vehicle Act, this judgment you should have read it thoroughly. Pronoy Sethi judgment. Various one-page summary of this judgment is anyway floating around in all the social media, that what are the various future prospects, what is the multiplier, how much amount can be paid by the tribunal under the conventional heads. So this is simply a factual question. So to remember this multiplier, see, 15 to 25 it is 18. Now from 25 to 30 till 50, the 5 age band, it will be reduced by 1. So 25 to 30 it will be 17, then 16, 15, 14, 13. So till 15 it will be, till 50 it will be reduced to 13, and then onwards it will be reduced by 2 each. So this 53 will come under 51 to 55, so that will be 11. 13 minus 2, 11, then 11 minus 2, 9, then 9 minus 2, 7, 7 minus 2, 5. So this is the way to remember the multiplier as per the Pronoy Sethi judgment. You need not to cram it, because when you can logically remember them, there is, because there are various other things in GRs which you need to cram, the compulsory deductibles, the short period rates, the GR8, the GR9s. So whichever things can be logically remembered, try to remember it logically. Like that geographical extension, we made a shortcut of PNB, SBM. So try to come up with these things. Wherever you have to cram, there is no go, you have to cram it up. But in this case, when there is an alternative, you can easily remember it like this, that till 50 it has to be reduced by 1, and then after that 2. So we'll move to the next one.
Question number 30. Under amended Motor Vehicle Act, Motor Vehicle Accident Fund is constituted under which section? Option A, Section 163A. Option B, Section 163B. Option C, Section 164A. Or option D, Section 164B. So the time started now. The correct answer is Section 164B.
As I told you in that hit and run case question, a new fund has been constituted, Motor Vehicle Accident Fund, MVAF, and it has been constituted under Section 164B. So this is another change which has been brought up by this amendment, a constitution of this new fund. And for the various purposes it has been constituted. Like one of the purpose I told you at that time was the hit and run compensation. So that Solatium fund is now no more in existence. If the compensation has to be met out, it has to be met out from this it has been divided into 3 sub accounts. So one of the sub account is hit and run. Then another purpose for which it will be used, that we will see another questions also, that a golden R scheme is there, that section 162. Now a free treatment for the victims during the golden hour. Golden hour is that one hour after the accident where there is, after that traumatic injury, where there is a maximum chance of recovery. If a proper medical attention is given, a cashless treatment is given, there is every likelihood that the victim will survive. So that golden hour scheme will also be met out of this fund also. So these are the various purposes. And in 164A, if you see, earlier there were 2 types of petitions that can be filed on the no fault principle. One was the section 140 application NFL, and then another one was the 163A, the structured compensation formula. Now there is no NFL concept now, so and that 163A has now been shifted to section 164. But still section 164A says that the government may come up with the interim no fault compensation in future also. So if that thing is done in the future, that will also be met out of this motor vehicle accident fund. So 164B has the provision for that.
Now we are going to question number 31. As per amended MV Act, what is the amount of compensation under section 140 for permanent disablement? Option A 50,000, option B 25,000, option C 12,500, or option D none of these. We will come with the answer after these 5 seconds. The correct answer is none of these.
As I told you that chapter 10 has been deleted in the new amendment which dealt with the no fault principle. So section 140 to 144 they have been deleted. So as per the amended act, there is now no interim compensation on the no fault principle available to the victim now. So the answer is D, none of these.
Question number 32. As per section 145 of amended Motor Vehicle Act, which of these is included in the definition of third party? See, in this question you have to select the most appropriate option because it may confuse you. Option A, driver and any other co-worker on a transport vehicle. Option B, government. Option C, driver and any other co-worker on a commercial vehicle. Option D, both A and B. So the clock has started running. The correct answer is both A and B.
See, section 145 deals with the various definitions. It deals with the various definitions that will be applicable throughout those chapters, chapter 10, 11 and 12. So one of these definition is third party. So if you see earlier also, it is not a exclusive definition. It used to be written in the act like that third party includes government. So government, in the sense, it means that the government can also be a litigant in this MACT cases. It might be a case where the offending vehicle has hit a government property, is at a government bus of a government like State Road Transport Corporation bus. You might have seen the TPPD cases filed by the various transport corporation across the country. So it gave it gave a way that government can also pursue a claim against the offending vehicle or its owner or its insurer. Now the ambit of that third party, now they have now increased in this new amendment. Now it says that third party includes government and driver and any other co-worker on a transport vehicle. Earlier what used to happen was that the driver, the cleaner, the ticket examiner, they were covered under section 147, but to the extent of WC liability. So now they have specifically made them as a third party. So now they can pursue a claim under MACT also. So earlier what used to happen, that they have to pay an additional premium under IMT 28 to get the liability covered. Now they are themselves are been treated as a third party. So we will see how this will be interpreted by the courts in future. But for the academic purpose, now the ambit of third party has been increased, and it has been increased to include the driver and any other co-worker of a transport vehicle. Since the act mentions transport vehicle, we have to tick A option rather than C option, which transport and commercial vehicle, they might be overlapping in certain sense, but since the act mentions transport vehicle, we will go with A and B.
As Pawan sir said, transport vehicle is also a type of commercial vehicle. Since it is mentioned as transport vehicle only in section 145, we will take the answer A in such kind of option where the section has been mentioned. Plus one query I am seeing from Shri Ayushman Banerjee ji. He is saying, sir, should not the answer be anyone other than insurer and insured? So I'll request Pawan sir to kindly elaborate upon this.
So this is a typical question which I used to get when I used to depose in the MACT courts during my previous place of working. Always I used to go, because we had various policies in which the private car act only policy or a two-wheeler act only policy where the occupants are not covered as such. So always the claimant the advocate used to say, sir, everything other than the insurer and insured is a third party. I'm not saying that they are not third party. Insurer is the first party, insured is the second party. Other than that, every third party. Here we are we are going into the contract act. That contract is between the two parties. But as far as Motor Vehicle Act is concerned, Motor Vehicle Act says which third party can be covered. If you see section 147, which all of them can be covered, it specifically tells us, section 147. So the most important, if you ask me, the important section as far as insurance company is concerned, it is section 147, because it tells you who all can be covered and who all are excluded. So we only cover covered third parties. We don't cover anybody other than third party. By the logic which Banerjee ji has asked, in that case the gratuitous passengers of a goods carrying vehicle will also be covered, because they are other than insurer and insured. But Motor Vehicle Act does not say that every third party, the other than insurer and insured, is covered. It says that passengers are covered, but who passengers? The passengers which are traveling in auto rickshaw, the public service vehicle. The workman will be covered, but who? The driver, the cleaner and the conductor. The employees of the insured are not covered. Employees of the insured, they are not the insurer, they are not the insured, but they are not covered. And they are covered when the additional premium under IMT 29 was paid. So I'm not saying that other than insurer and insured is third party, but as far as the context of Motor Vehicle Act is concerned, we have to deal with covered third parties rather than the third parties. We'll move to the next one.
Question number 33. As per Pronoy Sethi judgment, general damages will be increased at the rate of blank percent after every blank years. Means we have to tell the rate of that increase and the years after which it will be increased. So A 15%, 3 years. Option B 10%, 3 years. Option C 15%, 5 years. Option D 10%, 5 years. So the time starts now. The correct answer is 10%, 3 years.
So see, Pronoy Sethi came in 31st October 2017. So at that time what used to happen was that why there was a need for a constitutional bench judgment on the quantum issue, how it will be calculated, because the various tribunals across the country were having their own approach. Some will give some amount, some will give, so it will be like a bonanza in one tribunal and a very less amount in another tribunal. So in order to avoid this ambiguities and to maintain a level playing field, to maintain some uniformity, this judgment was a 5-judge bench was constituted, and they gave this judgment Pronoy Sethi. So they told that the conventional damages, that loss of that funeral expenses and loss of estate, they capped at 15,000 each, and the loss of consortium 40,000. So it was 70,000 at that time. But Apex Court, in its own wisdom, they thought that there will be inflationary pressure across once you in the future also, because the inflation will increase, everything will increase. So they made a provision that these rates are not they are not, what to say, they are bound to increase after a certain period of time. So that rate and what will be the time period, they have defined in the judgment itself, and it is rate of 10% after every 3 years. So 10% and 3 years is the answer.
Question number 34. In amended Motor Vehicle Act, which item has been added under term property in section 145? Option A, bridges. Option B, trees. Option C, culverts. Option D, baggage of passengers. 5 seconds starts now. The correct answer is baggage of passengers.
See, as I earlier told you, 145 deals with the various definitions. So one of the definition is the property. Property, if you see, it is in the context of third party property damage. So what will be the meaning of the property if you see a third party property damage? So the first 3 options, bridges, trees, culverts, were already there. So this baggage of passengers have been added, the scope has been expanded. So now if the owner of the baggage of the passengers can also maintain a claim, a TPPD claim against the offending vehicle owner or the insurer. We will move to the next one.
Question number 35. As per Pronoy Sethi judgment, what will be the percentage of addition towards future prospects if age of self-employed deceased was 44 years? Option A, 50%. Option B, 40%. Option C, 30%. Option D, 25%. The time starts now. The correct answer is 25%. I remember one of our audience has asked this question in the chat. We deliberately did not answer this question because we knew that such type of question is included in our quiz, and now Pawan sir will explain what is the logic behind this.
See, the first of all, the answer is very factual. You have to remember that Pronoy Sethi table only. The main question is why this future prospects is there. See, if a person dies in an accident and the court considers his income at the time of accident, so he would have if he would have lived, if that accident would not have happened, he would have lived. So it does not mean that he would not have got any promotion in future. He would not have got any. There is always a room for improvement. He would have always got it. So in order to cater to these situations, there is a concept of future prospects. And future prospects, if you see the Pronoy Sethi judgment, it has been divided among the according to the various the nature of the job. So whether it is a salaried job or it is a self-employed or business job. So for a self-employed deceased, if the age is between 40 to 50 years, the future prospects which would be applied will be 25%. Answer is D.
Question number 36. As per amended Motor Vehicle Act, upon the death of victim, the right of person to claim compensation of an injury in accident shall A. shall not survive to legal representatives. B. shall survive to legal representatives only if death has nexus with injury. Option C. shall survive to legal representatives whether death has nexus with injury or not. Option D. none of the above. So the time starts now. The correct answer is shall survive to legal representatives whether death has nexus with injury or not.
See, this provision has been now included, specifically included in section 166. It is in the favor of the claimants. So if let's say if an injury case has happened as a result of the motor vehicle accident, and that person after sustaining the injury has died a natural death, in that case what used to happen was that because the cause of the action that person has died, though even though some of the courts used to entertain it when the legal heir will step in the position of that injured, but now it has been specifically made clear in the act itself that whether that the subsequent death after the injury, it had a nexus with that injury or not, this claim will survive, and the legal representative can step into, they can be implead themselves as a petitioner and still maintain a claim against the offending vehicle owner, driver and the insurer. So this is another thing which you should remember in section 166. So the question answer is C, shall survive to the legal representatives whether the death has a nexus with the injury or not.
Question number 37. As per amended MV Act, what is statutory TPPD limit? A. Rupees 6,000. B. Rupees 1 lakh. C. Rupees 7.5 lakh. Option D. None of the above. So the time starts now. The correct answer is none of the above.
See, the section 147 earlier it dealt with the what are the limits. The title of section 147 itself is requirement of policy and limits of liability. So it dealt what are the limits of liability. For death and injury it used to be unlimited, and for TPPD the statutory limit was rupees 6,000. Even though in our policies we had the limits of 1 lakh and 7.5 lakhs, and if we wanted to restrict it to the 6,000, we used to get a TPPD discount as prescribed in GR 39 of the tariff. Now in the new Motor Vehicle Act, since I told you that central government in consultation with IRDA will come up with the rates and the corresponding liability, so that limit has been totally removed. And if you see that motor third party premium and liability rules for financial year 22-23, the Ministry of the Road Transport has made it unlimited. So now there is no limit as such for a TPPD claim. So it is D, none of the above.
We are moving to the next question. Question number 38. Compulsory PA cover for 15 lakhs was introduced as result of which judgment? We have to tell the name of case. A. United India versus R. Rekha. B. Rajesh Tyagi versus Jasbir Singh. Option C. S. Rajashekaran versus Union of India. Option D. New India versus Urmila Haldar. Time starts now. The correct answer is United India versus R. Rekha.
So it's a factual question. If you see this CPA cover for 15 lakh, earlier it was for 1 lakh and 2 lakhs. So this landmark judgment, United India versus R. Rekha, pronounced by Madras High Court in 2018, I think, 18 or 17. So in that, what the court observed that, see, the owner is paying for the liability of third parties. Owner is paying for the vehicle damage, but if anything happens to him, he will only have what he will get, only 2 lakhs, 1 lakhs, and considering the inflation, it is just peanuts. 2 lakhs or 1 lakh is nothing. And this tariff was envisaged in 2002, So till now 17 years have passed by, still that limit has not been increased, even though the some of the insurance company were having some platinum covers and some additional covers, but they were optional in nature, they were not compulsory in nature. So if anybody wanted to increase it, they could have paid the extra premium and could have easily got it. But so in this case, the government, Madras High Court gave the directions to the regulator that you come up with such policies where the minimum 15 lakh PA cover for the owner should be there. So if as a result any accident happens and the owner of the vehicle dies, he should also get some amount, as third parties are getting. So he should also get some amount, because if he maintains a petition in the third party, because owner is not a third party, so he can't maintain a MACT petition. So the only recourse is the compulsory PA cover, and that limit was increased to 15 lakh as a part of due to this instructions given in the United India versus R Rekha.
We are moving to the question number 39. The document which is to be issued in respect of a motor vehicle only in Form 51 in terms of Rule 141 of Central Motor Vehicle Rules 1989 is known as A. Stamped policy document, B. Cover note, C. Certificate of insurance, or D. Renewal notice. The countdown has started. Correct answer is certificate of insurance.
See, this question is I have been asked multiple times. You would have find in very other question banks also. See, the Rule 141 of Central Motor Vehicle Rules, it has a Form 51 and it deals with the certificate of insurance. So the answer is certificate of insurance.
Question number 40. Up to what amount the towing charges are payable for private cars? Option A, rupees 300. Option B, rupees 750. Option C, rupees 1500. Option D, rupees 2500. The time starts now. The correct answer is rupees 1500.
See, GR 47, it deals with the towing charges and it deals with the additional towing charges also. So the inbuilt towing charges which can be paid by the insurance company is, for a private car it is rupees 1500. So that table you have to remember, because questions may be asked on that. So GR 47 table and the additional towing charges, and what is the premium charge if you want to extend those towing charges limit, that is also mentioned in GR 47. So the answer for this question is C, 1500.
Question number 41. In case of an accident, ordinary spot repairs for two-wheelers due to damage caused by insured peril is covered up to rupees 100. Option B, rupees 150. Option C, rupees 500. Or option D, rupees 750. The time starts now. The correct answer is rupees 150.
See, as I earlier told you, please go through the wordings of the standard wordings of the various policies given in section 6 of the Indian Motor Tariff. So if you will go through the wordings of two-wheeler package policy, the ordinary sport repairs, the insured itself can pay if the damage has been caused by the insured peril, and that will be reimbursed by the insurance company, and that limit is rupees 150. So B. So please go through the standard wordings, the various exclusions, what all are covered, what insured peril is covered, and what are the various exclusions in that, and what are, if there is any time limit prescribed in any of the conditions. So section 6, it deals with all those wordings. It will have a liability policy wordings, it will have a two-wheeler package policy wording, it will have a commercial vehicle package policy wordings. So most of the wordings will be same, so there will be some minor changes. So if you go through one, most of it will be clear. And most importantly, one of them is the limitation as to use, how the limitation as to use the limitation has to use varies according to the category of the vehicle. So there is a question from Sri Ravi Sastri ji whether the CPA covers only death and PTD. Yes, the death cover it has a very that schedule is there. If you see the GR 36 A and B, or even if you see the IMT 16, 17 and 18 and 15, it has a that table is there for death, for loss of one limb, loss of limb, then permanent total disablement. So that the amount which will be reimbursed by the insurance company for a PA cover, whether it is a optional PA cover, whether it is a compulsory PA cover, it will be strictly according to that table itself. So nothing else will be paid. If that does not fall in that table, the liability of the insurer will be strictly as per that table itself. We'll move to the next question.
Question number 42. Cashless scheme for golden hour treatment is envisaged in which section of amended MV Act? Option A, section 163. Option B, section 161. Option C, section 164A. Option D, section 162. The countdown has started. The correct answer is section 162.
See, as I told you when we were discussing the hit and run compensation and the motor vehicle accident fund, a new scheme for the cashless treatment for the golden hour has been brought about by the legislator in section 162 of the Motor Vehicle Act. So, as I told you, that golden hour is that critical 1 hour after a traumatic injury where there is a chance, if a medical attention is given to the victim, he may survive. So in a longer run it is very beneficial for the general insurance industry, because if the victim is treated there and then and the treatment is given expeditiously after the accident, all these death cases will be converted into a grievous hurt, and the grievous hurt will be converted to a simple case, because the necessary and the medical attention has been given urgently. And so this scheme is very much beneficial for the public at large, and especially for the general insurance industry in a longer run. It will definitely reduce our liability, and the answer is section 162.
We are coming to the question number 43. Under the amended Motor Vehicle Act, no appeal shall lie against any award if blank is less than rupees blank. So the option A, awarded amount by tribunal and rupees 50,000. Option B, awarded amount by tribunal rupees 1 lakh. Option C, amount in dispute in appeal 50,000. Option D, amount in dispute in appeal 1 lakh. The time starts now.
So if you see,
the correct answer is amount in dispute in appeal rupees 1 lakh.
So if you see, everyone will know this rupees 1 lakh. So but the question is which amount? It is not the amount awarded by the tribunal, it is the amount in dispute. So even though the award might be for 5 lakh or 6 lakhs or 7 lakhs, but we have to see only the amount in dispute. The insurance if the amount in dispute is exceeding rupees 1 lakh, then only the appeal will be maintainable. Earlier also, for all practical purposes, High Court are not entertaining the appeal less than 1 lakh. And even the insurance company also did not want it to go, because it will anyway the expenses which will be incurred, the legal expenses, whether it is in the form of fees to the advocate or whether it is in the form of the court fees to the court, so it was not economically feasible. But now the legislator has made it as a rule itself in section 173 that if the amount in dispute in appeal is less than 1 lakh, the appeal is not maintainable. You can't approach an appellate forum. So we'll move to the next question.
Question number 44. An insured vehicle during the currency of policy gets installed with anti-theft device approved by ARAI. How will discount be calculated as per GR 28. Option A, on short period basis. Option B, pro rata basis. Option C, discount not allowed for midterm installations. Option D, discount will be given for total duration. So the time starts now. The correct answer is pro rata basis, option B.
So if you see the 1 minute. See the actually how much discount will be calculated, it should be as per GR30, not GR28. So my mistake, because 28 deals with the automobile association discount. So you just read this as a how much discount will be calculated as per GR30. So if you see, if any during the currency of the policy, if there is a midterm installation of the anti-theft device, the GR30 makes it clear. So even if GR28 also makes it clear, if you get a membership in between the currency of the policy, the discount will be calculated on a pro rata basis. So the answer is pro rata basis, and please read this as GR30. But the similar thing will apply as GR28 also when there is a midterm association membership you get during the currency of the policy. So answer is pro rata basis.
Question number 45. As per GR9, what is the rate of depreciation for painting charges? Option A, 25% of material cost of painting charges. Option B, 50% of material cost of painting charges. Option C, 25% of painting charges which are for labor. Option D, 50% of painting labor charges. The time starts now. Correct answer is 50% of material cost of painting charges.
So if you see the painting charges, it includes both material cost as well as the labor cost. So GR9, even though initially it was not there in GR9, subsequently TSC came up with the circular that how these painting charges have to be seen into, how the painting charges, how the liability will be there for, and what amount of depreciation will apply for a painting charges. So for painting charges, for labor charges there is no depreciation at all. Only for the material cost of the painting charges there is a depreciation, and that is 50% of the material cost of the painting charges. So the answer is B, 50% of the material cost of painting charges.
Question number 46. A transporter wants to insure his legal liability towards the clerk who frequently travel in his own truck. Under which IMT endorsement insurer can take the payment to cover the said legal liability? Option A, IMT 38. Option B, IMT 39. Option C, IMT 37. Option D, IMT 37A. The countdown has started. The correct answer is IMT 37.
So if you see, this question might be a little bit tricky. If someone is working in TP department, they might know the answer, but see, if you see the legal liabilities to the workmen of the compensation which is statutorily covered, they are covered under section 147, and now with the new amendment they are being treated as a third party, the one who was a driver or the one who was a co-worker. But let's say if there is one transporter and he has a clerk who is not a workman, he is the employee, but he wants to cover because he frequently travels from one place to the other, from the warehouse to the godown or something. So if he wants to cover it, there is a concept called legal liability to a non-fare paying passenger employee. So there are two versions of it, one is employee and one is the non-employee. So the person who is not the workman but he is in the services of that insured, he can get his legal liability covered by paying the additional premium under IMT 37. So the answer is IMT 37. So this is a very difficult question. This type of question may or may not be asked. So just to make everyone what this IMT 37 means, we have specifically included this question. So if anybody does not know it also, please don't take it in your heart. It's a tricky question, it's a hard question.
Now we are moving to question number 47. Which endorsement is used in motor trade policies for extending cover for demonstration driving purposes? Option A, IMT 60. Option B, IMT 61. Option C, IMT 62. Option D, IMT 63. The time starts now. The correct answer is IMT 60.
So I will request you to read IMTs after 40 also, because people don't read it. So especially those are concerned with the miscellaneous vehicles and the motor trade policies. At least you should know the basic thing. I know they are very difficult and very rarely used in the day-to-day parlance. So when a motor trade policy is issued, and if you want to extend the cover for a demonstration driving, for a test driving, when the vehicle is in the when the employee of the insured, the motor dealer is also traveling along with that. So if I want to purchase a new vehicle, I want to get a test drive. So that policy will be in cover. It will not be suspended when the demonstration driving is taking place. So for keeping the policy running for the demonstration driving purposes, this coverage is there. So additional premium has to be paid under IMT 60. So the answer is IMT 60. So just have a look at it. All the IMTs which are numbered after 40, because miscellaneous vehicles, some overturning and all those IMTs might be you are using it on a day-to-day basis, but all the other endorsements, especially those dealing with the motor trade policies, you will hardly see. Even I have never issued a policy, even though I have got one claim now. When the vehicle was used for a demonstration driving. Just have a look at it, have a cursory glance, so that if any factual question is asked on it, you are able to answer it. So answer is IMT 60.
The quiz is moving into the last phase. We are having around 54 questions for this quiz. Afterwards there is one surprise for you, one bonus you can say. So we are moving to the question number 48. In motor trade policies, which endorsement extends the coverage in the cases where insured vehicle is used privately by member, director or employee of the insured? Option A, IMT 58. Option B, IMT 59. Option C, IMT 60. Option D, IMT 61. We will come with the answer after these 5 seconds. The correct answer is IMT 59.
So tariff took care of that possibility also, when the motor policy, the trade policy is issued, and the vehicle is being used privately by the member or the director or the employee of that motor dealer. So in that case, that coverage is extended when this thing is happening, that when the vehicle is used privately. And for that, the IMT 59 endorsement is attached to the policy. So the answer is B, 59. As I earlier told you, please have a cursory glance on these endorsements. You may not be able to get all the things, because the one we are not familiar with, the one we do not do on a regular basis, it is very difficult to prepare them. So but what to do, for academic purpose, for test purpose, we have to do them. So IMT 59 is the answer for this question. We'll move to the next one.
Question number 49. For an external CNG kit of a private car, the chargeable OD premium will be A, 4% of the value of CNG kit, B, 5% of the OD premium, C, no loading is required, option D, 5% of the value of the CNG kit. The time starts now. The correct answer is 4% of the value of the CNG kit.
So a CNG kit can be fitted externally, and it can be a company fitted CNG kit also. So whenever there is a external CNG kit, as it was in the case of electrical accessories also, it is always the 4% of the value of that accessory or the CNG kit. And if it is a company fitted, then the 5% of the OD premium. So company fitted is 5% of the OD premium. If it is externally fitted, it is the 4% of the value of the CNG kit. But in both the cases, the TP premium 60 rupees has to be charged in both the cases, whether it is a company fitted biofuel kit or whether it is a external biofuel kit. The TP premium has to be increased by rupees 60 in the liability section of the policy. So the answer for this question is A, 4% of the value of the CNG kit.
Question number 50. Standalone OD cover can be given to A. New vehicles, B. Old vehicles, C. Old and new vehicles both, option D. This product has been withdrawn by IRDAI. Time starts now. The correct answer is old and new vehicles both.
So if you see, first of all we'll see what is standalone OD cover. Standalone OD cover, it only covers the loss or a damage to a vehicle, means the section 1 of a package policy, if you can say it. So why it was required? First of all, we will trace back it. We have a PPT in we have a PPT in our channel called Recent Developments in Motor Insurance, where this entire thing has been elaborated in detail. And there was one another a request by Mr. Bhaskar sir that we have to please tell me about the other judgments also, like when we were discussing the United India versus R Rekha case. So in this there was in 2018 there was one case filed in Apex Court, Rajasekharan versus Union of India. He was a activist, and he was very much perturbed by the fact that even though 146 provides for a compulsory insurance, still majority of the vehicles, especially the two-wheelers and the private cars, are running on the public roads without any insurance. So for the first year, because it's mandatory cover, no dealer will give you a vehicle, they will insure it, but after that nobody will renew it, especially for two-wheelers. For private car they might renew it because the substantial amount of risk is there. For two-wheelers hardly they care. So what used to happen was that their accident used to happen, and the third party, because the insurance was not there, so owner will not be able to pay. So there was a difficulties faced by third parties also, and due to it the vehicle implant, it gave rise to a fraud also. So they will implant a vehicle which is having an insurance. So all these things were there. So in that judgment, Apex Court, the Supreme Court, gave directions to the IRDA that at least for two-wheelers and private cars we should have a long-term liability cover at the time of taking the new vehicle itself. So for two-wheeler it was 5 years, for private car it was 3 years. Subsequently that policy came into a force. So what IRDA circular said that you can have a long-term liability policies as well as a bundled policy. A new concept was called a bundled policy, where the OD cover will be only for 1 year and the TP cover will be for the 3 years or the 5 years, as the case may be. So what happens after that one year passed by, that OD cover will lapse because it was for 1 year. So to take care of that situation, that standalone OD cover was introduced by IRDA, so that the OD cover can be continued maybe with the same insurer or the different insurer. So that circular said that the standalone OD cover can be given for both old vehicles also as well as the new vehicles also. So the answer is A, and B means the C, old and new vehicles both. The answer is C. We will see the application of this standalone OD cover in the next question also. So why this was introduced, I have told you that. So, and S. Rajasekharan versus Union of India is also one of the landmark judgment, which is very important also.
Question number 51. If Mr. A purchases a new car, what all options can he exercised while arranging for the insurance? A. Standalone long-term liability policy. B. Bundled policy. C. Standalone long-term liability policy plus standalone OD cover. D. All of the above. The countdown has started. The correct answer is option D. All of the above.
So, as I told you, the standalone OD cover can be given for a old vehicle also and a new vehicle also. So that provision has actually delinked the OD portion from the TP portion as far as motor vehicle insurance is concerned. So now if I am purchasing a new vehicle, one thing is for sure, for the new car or even for a two-wheeler also, that my liability portion will be for 3 years or 5 years. That can't be changed. Okay, so the first option says standalone long-term liability policy. So yes, this is possible. If I don't want to cover my vehicle, I want to take care of only liability, my third-party liability, and that I have to do compulsorily because I don't have any other option as per section 146. I have to definitely cover it. And that cover now has been expanded to 3 years or 5 years as per the directions of the Apex code. So the first option is correct. Second one, bundled policy, absolutely. If I want to cover the vehicle or my damage to the vehicle for 1 year, and in bundled policy, anyway the liability cover will be for 3 years or the 5 years. Now the third option, standalone long-term liability policy plus standalone OD cover. Now since the standalone OD cover can also be given to a new vehicle also, now this option I can also exercise. I can take a bundled policy also, and I can take a two policies also. One is for the long-term liability policy and one is for the standalone OD cover. And this gives me flexibility. If I want to insure, if I think the OD claim, the services of a particular insurer, let's say A or B, I like their service. They are giving me cashless settlement. They are giving me all the other privileges. They have more add-on covers with me, so I won't be forced to buy it from another liability insurer, the one who is insuring the liability insurer, because they both can be from the same insurer as well as the different insurer also. So this gives me flexibility to choose the best insurer as according to me. So the answer is A, B and C, means the all of the above. So the answer is D, all of the above.
Question number 52. Can long-term standalone OD cover be issued by general insurance company in India? A. Not permissible by IRDAI. B. Permissible. Option C. Permissible if any company files new product under file and use guidelines. Option D. None of the above. Time starts now. The correct answer is it is not permissible by IRDAI.
So when that circular came out regarding the standalone OD cover, I think in September 19 or July 19 the circular came, and September it was made effective. So it was specifically written that OD cover standalone will be an annual policy. So it is not permitted by the regulator, and now no such product exists in the general insurance industry because the regulator prohibits it specifically through that circular. So the long-term standalone OD cover is not permissible to be issued by any general insurance company in India. So the answer is A, not permissible by IRDAI. Now the next two questions will be numerical. Don't go by the time limit. It may be 5 seconds. You may not be able to answer it in 5 seconds. The main thing is that the explanation we will be giving you, how to deal with such questions in exam, how to read the questions, how to get the various facts from it, which fact is relevant, which fact is irrelevant, how to apply the various GRs in combination. So over to Pranav. So next two questions, even the time ticker will go on for 5 seconds, but just you see the exact explanation which is given by us after the question.
Question number 53. A. 1399 cc private car manufactured in April 2018 with 20% NCB and IDV of rupees 5 lakhs. It met with an accident in July 2021, having damages to metal parts of the car for rupees 20,000, plastic parts for rupees 10,000. There were charges for painting rupees 10,000, labor for rupees 5,000, and some salvage was also there for rupees 750. Now we have to calculate the claim payable. I am giving the options. Option A rupees 31,000, option B rupees 32,000, option C rupees 33,000, option D rupees 28,250. See, we will start the timer because it is compulsory for us, but it is not compulsory for you. You can take your own time. After this question we will be giving the complete working of this question, how to calculate the correct claim amount. So we are starting the timer. And the correct answer is rupees 32,000. We will move to the working of this question and it will be explained by Shri Pawan sir.
So, first of all, let me get back to the previous question. The question. See, if you see the wordings of the question, what is mentioned? The cubic capacity of a private car. Okay, you keep it in this mind that cubic capacity is there. The manufacturing a month is there. 20% NCB and IDV of 5 lakh. And if you see, we have to calculate a partial loss liability of the insurer. Now, for calculating a partial loss liability, which GR will come into play? GR9. So, NCB is irrelevant for me. 20%, whether he was enjoying 20%, 30%, it does not matter to me. For the purpose of calculation of a partial loss liability, this is irrelevant. This has just been given as an additional fact which I can conveniently ignore, which does not have any purpose for the calculation. Similarly, IDV 5 lakh, it's not a total loss, it's not a CTL. It might be a CTL, but we will see, because it is not a CTL. If you see the amounts involved, it is not 75% of 5 lakh. So it is not a CTL case also. So IDV also we can conveniently ignore. Now, then we will move to the calculation, how it goes. So the metal part, if you see 20,000 metal part, if you see GR9, the exact the table is there, that how the metal parts, the depreciation will be there. It is based on the age of the vehicle. So you calculate the age corresponding to that. You refer to the table in GR9. GR9, it says that the 75%, the 25% depreciation will be there. So the claim payable will be for the metal parts will be 75%. So 75% of the 20,000. So that means 15,000. As far as plastic parts are concerned, the damage is as per GR9, 50% will be payable. So 50% we have deducted. So it is 50% of 10,000, 5,000. Now if you see, the painting charges are given in a consolidated manner, rupees 10,000. So GR9 also says that if there is a bill of a painting charges are given on a consolidated matter, then how to arrive at the material cost and how to arrive at the labor cost. So for that, it is simple. It will be the 25% will be deemed to be the material painting charges. So out of 10,000, 25% will be the material painting charges. That means 2,500. And it also says that on those on the material part there will be a depreciation of 50%. So means 2,500 of 50% of 2,500, it will be 1,250. And the labor painting charges will be 7,500, means 10,000 minus 2,500, that is 7,500. So 7,500, and so that will be payable. And the labor charges for the other thing, it is given in 5,000. So you have to add all of them and then deduct the salvage. Salvage is already there in the questions, 750. And then the GR40, that compulsory deductible charge, you need to remember, and the deductibles are as per the cubic capacity of the private car. So less than 1,500, it is 1,000 rupees. So when you do the calculation, the answer will comes around to be 32,000. So this is the way we have to approach the questions. We have to ignore the facts which are irrelevant for the purpose of the calculation. Like in this case, it was a partial loss, and we don't need this NCB, we don't need this IDV, because this is not a CTL or a TL. So based on that, we will refer to GR9, GR40 and arrive at the our liability. We'll move to the next one.
Now question number 54. A 7 years old private car which was of 1599 cc met with an accident having damages to metal parts for rupees 10,000, plastic parts for rupees 8,000, painting material for rupees 8,000, labor for rupees 12,000 and salvage for rupees 500. Now we have to calculate the claim payable. Option A, rupees 23,500. Option B, rupees 24,500. Option C, rupees 28,500. And option D, rupees 27,500. We are running the timer. Correct answer is rupees 23,500. Let us see how to arrive to the correct answer.
See, in this case also, if you see that NCB and IDV is not there, and it's also a partial loss case. So similarly, as we did it in the previous case, the material part will be based upon the age of the vehicle. So it will be we will deduct 40%, and it will be the 60% of the 10,000 based upon the age of the vehicle, that's 7-year-old. Then the plastic part, it will be 50% deduction, and the material painting charges, because in this is not a consolidated bill, so it is, they have given it in the question itself, painting material for rupees 8,000. So we'll simply apply 50% on that part, so that is 4,000. And if the labor charges payable they will be paid in full, and then we have to deduct the salvage and the compulsory deductible, and we will arrive at this amount of 23,500. There is a question from I think Rishabh Varsne ji. Can we directly deduct 12.5% for the painting? You can do so when a consolidated painting bill is there. So if you see, then you will 25% will be the material charges, and half of it means 12.5%. So if a consolidated the bill is there, inclusive of both the paint and material, the labor and material, then you can simply apply that formula, 12.5% of the consolidated bill you can take. So but where the painting material is specifically mentioned, you have to take that and depreciate it for the 50%. So these are the questions as far as questions part is concerned. So if you see my Motor Vehicle Act Amendment PPT, which is there on the channel, it was somewhere made last year. At that time, that Motor Vehicle Act Amendment, even though it was passed by the Parliament, it was not yet come into the force. So it has come into the force from 1st of April 2022. So one of the salient features of that amendment was the section 149. Section 149, earlier it dealt with the defenses available to the insurer company, the statutory defenses, and now it has become section 152, and new defenses like drunken driving and influence under the effect of the intoxicating drugs, and the 64 VB violation has been made the statutory defense, which have been made in the new amendment. If you see the section 149, it has now carved out a procedure for the faster settlement of the MSCT claims. If you see the MSCT claims earlier, they are long tail liability claims. They will take a lot of time will be the judgments will come in years. It will take 5 years, 6 years, and in some of the states like 10 years, 12 years, and then they will go for an appeal, and it will go on and on and on, and it will adversely affect the claimant also. Claimant will not get the money, and it will adversely affect the insurance company also, because the interest will run on them. and moreover our IBNR and all those things will come into the picture, and our liability will be amplified, our liability will be increased. So in Delhi there was a system DAR regime set up by Honorable Justice Mida in 2007-8 as the part of that judgment of Rajesh Tyagi judgment. So the DAR system was there. If you see section 158(6) of the earlier act or the section 159 of the new act, it is the responsibility of the investigating officer to submit any motor accident report to the concerned tribunal as well as a copy to the insurer, and that limit was earlier 30 days. Now it has been increased to 90 days now. So, and section 149 has come up with an elaborate procedures on the lines of the DAR system which is happening in the NCT, National Capital Territory of Delhi. The ones who are from Delhi, they might be knowing it. So now in February 20 or 21, the modified DAR system has come. So on the similar lines of the modified DAR system, section 149, the entire procedure has been now officially gazetted. The Central Motor Vehicles rules have been amended to that effect. So now, because since I could not cover this topic in the amendment, so I thought because you are appearing in the exam or even for knowledge purpose also, so I thought it convenient that I will include this also after the questions. So we'll see this flow chart is more than enough for you to see, because it tells about to the various timelines what each stakeholder has to follow. It also tells you the information flow, the process flow, how the information will flow, how what will happen after what things, so the entire procedure of the sequence of events. So the first thing that how that this procedure will be initiated. There is a motor vehicle accident. So once a motor vehicle accident happens, within the 48 hours, IO, investigating officer, means the police official, has to submit an first accident report, that is called FAR, and that format is also there. If you see the 25th February notification of the Ministry of Road Transport, the entire procedure is there, and that in the annexures various forms are there. What will be there in that form, that we will not go in detail, but it has to be submitted in the form 1, and a copy of it will be given to the victim as well as the insurance company. If you can see the various arrows, that will tell you how the information is flowing through the system. Then investigating officer will also, within the 10 days, it will also provide a victim form as prescribed in form 2 to the victim, in which that various rights the victim has. He has a right for FIR, he has the various rights which the victim enjoys statutorily, they will all be provided to them. It's a kind of to empower the victim that you can do this, you can do that will be provided by the IO to the victim within 10 days. And the driver form, the prescribed in form number 3, it will be given by the driver to the IO within the 30 days. It will have all the driver specific details, his DL, whether he was injured or not, or from where he is, all the driver specific details, whether he was under the influence of drugs or not, whether he was using mobile at the time of accident. All these details will be filled up by the driver, and it will be given by the driver to the IO in the prescribed format, form number 3, within the 30 days of the accident. And similarly, the owner form, it is written by driver to IO, it will be submitted by the owner to the IO within the 30 days in the form number 4. So it will have all the owner specific details, the registration, permit, fitness, all those details which are pertaining to that owner. It will be there in the form number 4. After getting all these information, and if you see, the copy of all of them is provided to an insurance company. So insurance company will have access to all this information. After getting all this information, an interim accident report will be prepared by the police authorities, and it will be submitted to the claim tribunal within the 50 days of the accident. So these time limits are very much important. What is the time limit for FAR? What is the time limit for IAR? And what is the full form of them? So all these things are very important. So once he gets all this information, the IAR will be prepared by the IO, and it will be given to the claim tribunal within the 50 days. So victim form, will have all the victim details. What are the various legal heirs? If it's an injury case, where he has taken the medical treatment, what are the medical expenses incurred, what are the various legal representative, what the funeral expenses they have incurred. So all the victim specific details will be filled by victim in the victim's form, and it will be given to the IO within 90 days, within 60 days, and to the IO. And after getting all this information, a DARF report will be prepared, that is a detailed accident report. So that has to be filled within the 90 days. So this 90 days, if you see, you tally it with the time limit which was prescribed in section 159 of the new amended act, where the time limit has been increased from 30 days to 90 days. So this is the time limit for getting the DAR report, detailed accident report, and the copy of it will be given to the insurance company as well as the victim. So within the 90 days, the final report will be submitted by the police authorities to the claim tribunal. And once this report is submitted, insurance company has to make an offer, and that offer will be made in form number 11, and that for the time limit that is also mentioned in section 149 of the new act, that is time limit is 30 days. So once they have received the DAR report, they will make an offer. So at this stage, what 2-3 things can happen. If the insurance company can accept his liability, and it can dispute its liability also. So if the insurance company accepts its liability, it will make an offer. And that offer will, as I told you, it will be made in the form number 11. Now once the insurance company has made an offer, there are 2 options available for the claimant. One is that the claimant will say, okay, I am okay with your amount, I am willing to take it, like any other compromise matter we will see in Lok Adalat, that it is reasonable and acceptable. Then that claim tribunal will simply pass an consent award, that all the parties have given a consent and they are willing for a settlement. And this entire procedure has to be completed within the 6 months of the accident. So this 6 months is the earliest period in which a MSCT claim can be settled as per the new amended act. So when the insurance company has made an offer and the claimant is willing to accept it, then a consent award will be passed, and the time duration for it is 6 months from the accident. Now another case can arise where the claimant says, we are not willing to accept your offer, it is not acceptable to us. In that case, now since the insurance company has admitted the liability, now the dispute is only regarding the quantum. So now the matter will go to the claim tribunal, and the claim tribunal will not go into details of the liability. It will only hear the arguments regarding the quantum. So only the quantum will be the main focus area when these arguments are heard, and after that the claim tribunal has to pass the award within the 9 months of the accident. Okay, so just see the time limits are prescribed for each and every stakeholder. Police officer has its own time limits for submitting the various reports. The victims, the owners, the drivers, they also have a prescribed time limit to abide by them for submitting their forms. Insurance company also has to submit the offer within 30 days. Even the claim tribunal also, the claim tribunals also have been given a prescribed timeline in which they have to dispose the case, whether it is 6 months, 9 months, whatever the case may be. So this is a procedure to streamline and to fast track the process of compensation. Now, as I already told you, there might be another case where the insurance company says that we are not liable. We dispute our liability. It may be a case of a gratuitous passenger in a goods carrying vehicle. It may be a case where it is a two-wheeler act only policy and pillion rider has died. There might be hundreds of cases, or where our vehicle is not itself negligent, the other insurance company vehicle is negligent. So there might be various cases where the insurance company will dispute the liability. So in such case, the insurance company will have to specifically tell the reasons also, that we are not giving an offer because we are not admitting our liability, and we are not admitting the liability. Why we are not admitting the liability? The grounds have to be disclosed in the form number 11. After that, the claim tribunal, as it does now, it will conduct an inquiry. A summary procedure will be there, and that has to be completed within the 12 months from the accident. So the earliest period is 6 months, the last period is 12 months. So in this case, the every issue will be taken up, whether it is quantum, whether it is negligence, whether it is liability. The case will be heard on merit, and the proceedings have to be completed within the 12 months of the accident. So this flow chart, we will put it as a PDF in the comment section. So only this flow chart, so that you can always see it once you because otherwise you will have to again go through our presentation to see this flow chart. So we will make a PDF and we'll put it as a as a comment in a comment section. We'll put, or even if you want to see, this flow chart is also there in the 25th February notification, the Central Motor Vehicle Rule Amendment given by the Ministry of Road Transport and Highways. In that also there is this flow chart is already there. If you want to refer that, you can also refer that. So with this, our today's agenda is over. We have finished the quiz, and I will just hand over it to Pranav for his last remarks.
So first of all, I thank all our audience for hearing us so patiently, and you have gone through all these questions. We hope these questions will have given you some confidence, some more confidence to face your exam. Most probably the concepts which we have explained will be helpful to you in the exam, and you will come out with the flying colors. And I would also take this opportunity to thank Pawan sir. He not only prepared this presentation but also has given wonderful explanations regarding the whole concept of the question related to the question. And see, just going through the questions is not enough. It will give you only 54 number of questions which you will be bound to learn only. But when the presenter is explaining the concept of each and every question, then certainly your knowledge will be enhanced, and you will not require to remember anything additionally. When the concept is clear, you can face n number of questions on the similar concept. So I again give my hearty thanks to Pawan Madan sir for preparing such a nice quiz and giving so knowledge worthy explanations and clearing our concepts also. Thank you, Pawan sir.
Just I'm going through the chat box, the comment section. There are certain questions which have been asked, so I will try to answer as many as I can. See, this Ravi Sastri sir has asked whether it is section 150 or 152, the defense to the insurer. The defense to the insurer, earlier it was 149(2), now it is 152. So section 150 subsection 2, so it deals with the statutory defense now. Gulsanji has asked that form number 4 has to be given by driver or owner. It was wrongly mentioned in the slide, as I told you when I was explaining it. It has to be given by owner only. So 3 has to be given by driver and 4 has to be given by owner. Okay, and Ramesh Sachdeva sir is asking what about section 149. So 149, as I told you, it is the same procedure which I explained you in detail. So section 149 says that the government may come up with such scheme, and they have done it. They have done it by amending the Central Motor Vehicle Rules by the notification dated 25th February. They have come up with these elaborate procedures on the line of modified DAR. So 149, it is deals with the settlement of officers, and settlement of the TP claim. Now Prakharji is asking, sir, is DAR the same as AIR? Not really. See, AIR, what we call Form 54, it was as per that section 158(6) of the earlier act. DAR is quite elaborate, more elaborate than that. Form 54, if you see, some of the offices would have received it also. It's very restricted thing, and it's very the information gathered by the police authorities in that report is quite very less. So DAR is quite an elaborate report, and the entire format, if you want to see, you can refer to the 25th February notification. All the form number 1 to 11, 12, whatever the forms are mentioned in that flow chart, all the forms are are there in the various annexers of that notifications. So if anybody wants to go deep into that, or if anybody is handling TP claims, so they should go deep into that. So for that they can go, but for academic, for this exam purpose, we have deliberately left. Otherwise, another 3-4 hours we need to take to explain all of them. So another question which is being asked by Mr. Bhaskar sir, that if a owner is a pillion rider and he has died as a pillion rider, whether the claim is payable under PA. See, owner driver cover, the CPA cover is dealt in GR 36, and if you see if you see the wordings also of that cover, it says that co-driving the vehicle, if his amount is getting out of the vehicle, or if he's co-driving also. So see, it all depends upon the interpretation of the court may grant, and usually the consumer courts have awarded in the favor of the insured itself. They treat them as if he is co-driving the vehicle. So I will it's a little bit contentious thing. As an insurer, we may have a different point of view, but the consumer courts have gone by the insured side, and they have treated them as a co-driver and have paid them the claim when the CPA for owner driver was taken. So I will see if there is any other questions. A relative friend had taken a two-wheeler and met an accident. So whether he claimed under in pillion rider under. So the question is not clear. See, Gulsanji has asked, quantum is based on which multiplier if his age is below 15. See, if age is below 15, various courts have taken various multipliers. So some take 18, some take 15 also, some have taken 13 also. So it all depends upon the wisdom of the courts, and minor fatal cases are dealt differently, especially for the age less than 15. So there is no clear cut answer. So it depends upon the court to court. So such type of questions usually examiner won't give. With that, I will take an opportunity to thank each and every one of you. I wish you all of the very best in your life. And today, if you know, it's the birthday of our Bharat Ratna Shri Sachin Tendulkar ji. So as he has progressed in his life, and as he has been able to do so many good things for Indian cricket and India, I hope that all of you will also follow his footsteps and bring laurels to them, their family, their country. And I wish you that in this upcoming exam on 30th of April, you all will emerge with the flying colors. And our team, GI Digest team, even though we could not do that much in this exercise, except those fire PPT, but yeah, from the next time we are trying that after this exam is over, we will every weekly or fortnightly basis we come up with new study materials on various subjects. As I told you, HR PPT, a very elaborate PPT done by Mr. Pranav, is going to come very soon, maybe in 2 or 3 days. So just have a look at it, go through it, and I wish you all the very best, and may you emerge with the flying covers. With these words, we will end this session and meet you next time, and all the very best. Thank you. Signing off. Thank you.